Hello everyone, welcome back to another video. My name is Ali. Let's talk about finance. In today's video, we're gonna go over what's better, the Registered Retirement Savings Plan or the RRSP, or the Tax-Free Savings Account or the TFSA. Now, this is actually a lot simpler than you think it is, and I'm gonna break it down for you to really help you understand what makes sense for you in terms of where you should put your money, especially when you're thinking about saving for retirement. So, let's get started. So first, let's talk about the differences between the RRSP and the TFSA. So the RRSP is essentially an account where you get to save for retirement. As the name suggests, it's a retirement savings plan. And from there, essentially what will happen is as you contribute into the account, you receive a tax refund for any money that you contribute because you get tax deductions based on the amount that you contribute. So say for example, your income is $75,000, you put in $5,000, you get a tax deduction of $5,000. So when you go to file your taxes, you get to claim $70,000 of income rather than 75. So essentially what ends up happening though is when you're ready to retire and you start to draw an income from the Registered Retirement Savings Plan, any money that's withdrawn, you have to pay taxes on. So this is really where things get a little bit complicated if you don't really know your situation. So in this case, any money that you're saving from a tax perspective, you're gonna have to end up paying tax anyway. So we're gonna break it down to see whether it makes sense to save on taxes now and pay it later, or go with the tax-free savings account. So with the tax-free savings account, essentially any money that goes into the account, you've already paid taxes on. So any growth and any withdrawals out of the tax-free savings account, you don't actually have to pay taxes on. So this is really where things are a little bit different. And you really start to have to play the game of what does it make sense to save on taxes to pay them later, or pay taxes now and save on taxes later. So it really is a little bit of a balancing act, and I'm going to give you a couple examples to really get you to understand what makes sense in which situation. There are some assumptions that we have to make. One is that the income tax brackets are going to be the same now versus in retirement. Now, of course, these always change on a regular basis, but for this example, we want to take into account that the income tax brackets are going to be the same. Another thing that we're going to take into account is any money that you're contributing into the RRSP. We're going to be looking at what would happen if you take a look at the after-tax equivalent, contributing that into the TFSA, and what happens when those grow over time. Now, here's a couple things to keep in mind. If your income right now when you're working is going to be higher than in retirement, you're more than likely going to benefit from the Registered Retirement Savings Plan rather than the tax-free savings account. If your income ends up falling in the same tax bracket, then really there isn't going to be any savings there. So let's take a look at a couple examples. Let's say, for example, right now you make $75,000 and in retirement you're expecting to have an income of $75,000. Say you invest $7,000 and you are going to reinvest the tax return that you get from the contribution in the Registered Retirement Savings Plan. What does that look like versus the tax-free savings account? So in this case, the value of the tax-free savings account for that $7,000 that's being invested over 30 years with a rate of return of 6% is going to be $28,284. Now with the Registered Retirement Savings Plan, it's also going to be $28,284, and that's assuming that you're going to invest the tax refund that you get from that contribution from the RRSP. So with that being said, all things are equal if you're in that specific situation. There's a big difference though if you decide to spend that tax refund that you receive from the contribution in the RRSP. The difference is going to be $28,284 in the tax-free savings account, and then $19,898 in the RRSP after taking into account the taxes that you pay in retirement in 30 years. So in this case, you can see all things being equal, but spending or investing the refund really does make a difference. And you can see here that the tax-free savings account, you actually end up further ahead than versus the RRSP if you were to decide to spend that tax refund that you received because of that contribution. Now let's take a look and see what happens if your income is higher now versus in retirement. So say for example, you make $150,000 right now, and in retirement, you're expecting to have an income of about $100,000. What does that look like for the same $7,000 that's being invested? If we take a look at the tax-free savings account with that contribution of $7,000, keeping in mind that you're now in a higher tax bracket. So the amount that you're gonna have when you go to retire in the tax-free savings account is $22,125 for that same $7,000 that's being invested. Now let's take a look and see what happens in the registered retirement savings plan now that your income is higher versus in retirement. As you can see, you're actually at an advantage by contributing into the RSP, as you'll have $27,548 after taxes paid in retirement. So that's an additional $5,424 because you contributed into the RSP and you reinvested the tax refund that you received. Now, let's take a look and see what happens if you spend the tax refund that you receive. By spending the tax refund that you receive rather than reinvesting it, now that actually puts you at a disadvantage with the RSP, where you'll have $15,160 in the RSP after taxes versus $22,125 in the tax-free savings account when you take into account the taxes that are paid there. So in this specific situation, you'll actually have $6,965 more by putting it into the tax-free savings account. So as you can see, in both of these situations, by spending the tax refund that you receive for those contributions in the RSP, it really does make a big difference. And it automatically puts you at a disadvantage in the RSP versus just investing it in the tax-free savings account. Like I said, these are just things to consider. And like I said, in a lot of situations, you are better off just investing in the tax-free savings account. However, if you are in a higher tax bracket when you're working, you can potentially have a better outcome in retirement when you're investing in the RSP. So there you have it, guys. Those are some examples to really consider whether or not the RSP or the TFSA is better for you. This is a very simplified overview of what this could look like. A lot of times real life situations can get a little bit more complicated, and that's okay. That's why there are professionals out there. You really want to talk to a financial planner to help you out with this, because financial planners will be going through all of these different scenarios with you to see what actually makes sense for you. If you guys like this video, please leave a like. And also, if you have any questions, please leave those in the comments down below. I'd be more than happy to answer any questions that you guys have. Also, if you learned something from this video, please share it with your friends and family. At the end of the day, if you learned something from this, I'm sure they will too. And it helps me also continue to grow at this channel, so then I could continue making these videos, so then you guys have this information readily available. As always, guys, stay safe, take care, and we'll see you guys in the next one.